Hello, everyone. A very good evening and welcome to the Kalari Net Zero Summit. We will just be starting in a minute or two and request you to be please with us and look forward.
Hello? Can you hear me?
Yes, Vani, we can hear you.
And sorry, just are we live or are we backstage?
Yes, we are live, Vani. We are live.
Okay. I think, I'm sorry, everyone, but I think I was sort of on a mute and didn't realize it. I don't know how many times each of us probably have this situation that happens. And Vinesh, shall we get the slides back up?
Yes, Vani.
Thank you, everyone, for joining. And we have a little bit of a late start, and I know we have some glitches, but I appreciate you being patient and staying with us. I'm really excited. And how really has climate change affected me? And when you think about that from day to day, it probably has not affected us personally, deeply that much, right? What is it that we have exactly changed in our lifestyle because we have needed to, and or because out of conscious self-choice? As much as climate change is here, and it's important that we um, and probably here are these are some these are probably pictures that have grabbed my attention. And there are thousands of such situations that we read in the newspaper or watch on the TV or on YouTube or whatever. But if you're living close to sea level or you're living in a drought zone, famine is real. Of course, the wildlife is significantly impacted. So out of all of this disaster year on year, where I was just recently reading about just how apple orchards have dried up because there is lack of rain. And, we read all of this that seems to prick on our conscience. But, however, to be able to truly extrapolate lifestyle from the optimism of what is possible 20, 30 years from now. India hopes in 2047 to be a 30, if not a 40 trillion economy. And all of that is predicated on continued energy usage and continued availability of unlimited planet resources for us. So despite all of that might feel depressing, the question is it truly lost or is there hope? And I am a optimistic person by nature and by profession. So I believe that it's not all lost, and we have to look at small, minor victories, if you will. Though a 1 degree change in Celsius on the surface may feel small, a 1 degree change in Celsius means that there is completely change in sea levels, and hence, changing of coastal lines and many issues that can that come up with that, from as we understand the planet Earth. So, today as we stand, at least, not that this is great news, but to find a sliver of hope, I think the Earth's average temperature has somewhat risen less than what we predicted it would. That's not to take away from the dire impact of this continued hot air emissions and depletion of ozone layer can do to us. But I think what this shows is, with awareness and action, that we can have outcomes. The question is, what is the role that startups can play? What is the policy courage that's needed around the globe to make this important? And also, as we think about from not just at a country level, but global policies, can we all come to a certain agreement? And as we have seen in COP and Paris agreements and UNEP and so on and so forth, all of these are complicated and take time. However, I do believe that we are a startup culture. We come from a mindset of technology as a innovator for good, and also that startups can take on difficult problems and many times surprised by achieving what seems like an impossible. So why not do that in climate? So that's the reason we are hosting today's Net Zero Summit, not because we have all the answers. I think all of us have many questions, but I come from experience and a spirit that collaboration and collective think can indeed make a difference and create solutions. So I want to offer 3 reasons for why this dialogue and this platform is important. And Net Zero Summit is really a platform. Of course, Kalari is an early stage investor, and we like to invest in emerging founders and emerging technologies, emerging business models, and emerging opportunities and problems. But having said that, where we take the most important pride is where our dollars work to create not just return on investment, which is an important metric for us to keep continuing to do what we are passionate about, but if we can really create impactful companies. But the Net Zero Summit is less about, funding companies, which at Kalari we are excited to do, but also to begin this early process of thinking about how and what is practical to achieve in step-by-step process to be able to get to large outcomes in the next decade, in the next 2 decades. I also want to share with you a philosophy, the power of one. Okay, we know that people how people think and their mindset makes a very, very big difference to any outcomes. And climate conscious is one of the most important thing, where creating that problems get solved without some outcome and benefit and some conscious awareness for change. So with the Net Zero Summit, it's also bringing the collective thinking of what is it that's possible, one company at a time, one person at a time, that in a collective platform can create an impactful change. I also really believe that this summit and this platform ongoing can create a platform for dialogue. I don't think we know, or any of us collectively know, all of the answers for what is actionable from technology solutions and profitable business models, yet creating a better world out of that. For too long, profit has meant exploitation, whether of human exploitation or resource exploitation. For too long, business models have been about that primarily. But I think a dialogue about are there better business models where, the impact for the world and profit can coexist. Lastly, innovation can move mountains, so to speak. So this is really where the existing entrepreneurs and their will to create something of meaningful value for the world. I would never underestimate the power of that willpower to create valid businesses. So to me, this is about, entrepreneurship, technology, experimentation for better outcomes and solutions. And it will certainly require us to think about business models different from the traditional way we have built businesses, let's say over the last century even. Next, so as a VC then, one of the common things I hear, in fact, we were meeting some founders prior to this, is the funding challenges that any entrepreneur in climate tech space faces for many reasons. First, the venture capital willingness to invest into something that is so nascent, where many answers probably can't be defined today. So there is a level of needed to make that happen. But let me share with you from investing capital and return on capital. So today, I think of so the business context. And what their lifetime for climate do the right thing if it costs fossil fuel to some other method or whatever. So technology has to bring the cost within affordable zones. You can always have some premium, but ultimately, if you're priced out of the market, just because it's the right thing to do for the world, I think it will be impossible to get customer adoption. So for a consumer that is going climate friendly, that might be their mindset, but I am not convinced that they'll pay a huge premium. They may be willing to pay a small premium for their motivation. And what this both of them mean to me is we need disruption in technology where we can bring the value proposition both from adoption and economics to something that is affordable. Think in every industry, whether it is mobile phones becoming affordable, and then there is a huge network effect, and so on and so forth, right? So we have to think of technologies that are IP-led, that drop the cost as it exists today for a customer adoption. And that's really the truly long-term moat of disruptive ideas. And that might take longer to build, because today, when I see a lot of ideas and opportunities, they're very incremental without really a strong technology disruption at its core. So these would be some of the things I would suggest, that we consider and think about from if you are an entrepreneur trying to work in this. So next, now that everybody is thinking climate, and as an entrepreneur, one suggestion I would have is to think about where are the biggest areas that are issues, and they may probably be the low-hanging fruit for opportunity to approach. Surprisingly, if you look at this, there are the global needs, the global exponential needs for heating and cooling overall, because we are big consumers, whether self-aware or not self-aware. And in fact, most of us are not aware of our personal carbon footprint in terms of how everything that we do contributes to that. And of course, the growing industries that serve us are equally proponents to these contributions. So, how do we manage our electricity needs and hence the heat and cooling needs, whether it's simple as low power batteries or emissions control and agriculture, right? So these, and manufacturing, I mean, some personal mobility. If you just look at this, these are some of the biggest areas where they are going to have the maximum impact in climate, and none of these have easy solutions, and none of these can have a simple business model solution. These require us to rethink from reimagining how these solutions need to be addressed for the world going forward. So, by the way, simple things, we made this event carbon neutral in working with our clients, and I would recommend you to go look them up. So taking that power of one and doing even small things that we can in every step that we take. So, today I think that getting so many of you here together who have an interest in this is the most important step. Solutions will follow. What humans have dreamed of, thought of, we have always been able to deliver. So next, to discuss, I want to give a big shout out to Kalari family companies that are working on various aspects of impact value in our carbon emissions and in the circular economy, in building cleaner, better products, as well as looking for alternatives that are less exploitive to our world. And we hope many, many more will join this family of creating value and impact to the world. So to discuss this opportunity, we have a great lineup of change makers here. And they've been not only generous with their time, I think each of them bring a deep passion to this project, to this cause. And I think they all have been involved in a way that they have effective business models through which they are making this impact and change happen. We have a Siddhant there, shout out, as I mentioned, for contributing to making this digital carbon neutral event. But I want to thank each of our speakers for joining today and sharing their deep insights and learnings. But I'll also share one thing. I find, because maybe we are on a grassroots basis in working on this opportunity, I see universality among this small cohort of change makers, true willingness to be mentors, support, and offer their insights and resources to a collective that can together make this outcomes really a reality. So, moving on, I would like to end this with hope. I think there is no humanity without hope. I believe that while we have lived in the last century, in the last 3-4 decades, in creating a better living for all of ourselves, that has come at too high a cost. But I also think that there is a deep goodness and recognition of coexistence with nature, with the world, that is, universal today. So while we may be in trouble climate-wise, but I also really do believe that human ingenuity, which means that we will reach the next We will move to the next session now, and please reach out to us in any way we can support. We are happy to hear from you and look forward to working together.
Thank you so much, Avani, for that. That was quite insightful and helpful. Before we have our next panel, we just request everyone to stay put. We should be starting the next panel talking about how to scale capex intensive climate businesses in just about a minute or two. So yeah, please bear with us. Thanks.
Hello, everyone. I have three inspiring entrepreneurs. I have three inspiring entrepreneurs with me, and I've studied impact and impact pertaining to climate for almost a decade, if not more. And all three of them, they have their body of work, their companies, their thinking has inspired me. So I'll let them introduce themselves. But before they do that, I want this to be as a conversation, and a conversation which is really both mindful as well as thoughtful, and very candid, frankly, unprepared candid. So when Nitin, Bhakta, and Anmol, we have this WhatsApp group, and they asked me, "Hey Ravi, what are you going to ask?" And I said that, look, you're such an inspiration to me, so telling you or giving you any clue will not be the right thing to do, frankly. My name is Ravi. I'm an engineer. I'm aviator also, and I'm a deep tech investor who teaches. I teach entrepreneurship and robotics. That's my introduction, and I let others introduce. But as I said before, I do that. A lot of people talk about impact, and that's a great thing because it evangelizes impact. Very few of them actually create impact, and we know most of them. But out of them, very few have got intentions to build a profitable impact, which can be sustainable for a very long time. And all these three gentlemen and leaders in their own category will focus on that broad aspect, and in particular pertaining, utilization of CapEx, both from the investment perspective and also for the longevity of the impact and the companies they are building it. So thank you. Thank you, Bhakta. I've known Bhakta for a relatively long time. Thank you, Nitin. Thank you, Anmol. Anmol, I have directly used your body of work, and Nitin, you have inspired. You have started this journey way long back. So thank you all for joining and sharing your views, and hopefully will inspire so many other entrepreneurs to create impactful entrepreneurship, and take your philosophy of entrepreneurship and agenda of impact and sustainability, way forward. So not in any order, but Bhakta, if you can start, and then I'm just calling names as I see on my screen. Anmol, and then Nitin, you. Thank you.
Hi, my name is Bhakta. I'm the CEO and co-founder of Chera Technologies. A very quick introduction. As you know, the world is undergoing a massive energy change. We are moving away from hydrocarbons to electricity, to an electric future. But to make this electric future successful, we need to make sure that the main component, the prime mover, the motor, is also sustainable and efficient. Most of the motors that are used in the electric industry today have permanent magnets in them, and magnets need rare earths, and rare earths have a few problems. Rare earths are this, 17 elements in the periodic table. They go by the name of samarium, dysprosium, neodymium, and they're critical for our electric future. But they have a few problems. They're expensive. They're difficult to mine and extract. They also have some temperature problems. And last but not the least, our neighbor country, China, has 90% control over the supply chain, which leads to a lot of issues. So what we are doing at Chera is very simple. We are building rare earth-free motors for electric vehicles and a lot of other applications to make sure that we successfully transition into an electric future. Thanks.
Thanks, Ravi. Thanks, Bhakta. For myself, I've been a serial entrepreneur in the clean green space. Graduated in 2007 as a petroleum engineer. Pivoted to renewable energy there. Then founded my first business called Gensoil Engineering which was a solar engineering business. We bootstrapped it to IPO. It's doing very well. It's been listed for the last 3 years. Stock is up 2,500%. So it's doing well for itself. 2019, me and Puneet Goyal, we founded BlueSmart. BlueSmart is an all-electric ride-hail business. Essentially, we found out that ride-hail is a great market to be in, very, very large TAM. The two large players in the market are not able to, kind of cope up with the demand. So we were as a greener alternative, and it's been a good journey in spite of COVID. We expanded to 2 cities now. We are present in Delhi and Bangalore. Operate a fleet of about 2,700 all-electric cars and about 1,700 charging stations. So that's a little about me.
Awesome, Nitin.
Great. Thank you, Ravi. Pleasure meeting Anmol and Bhakta as well. Part of what we do actually is a problem statement that both Anmol and Bhakta have pointed out. So Bhakta did say that rare earths mining and extraction is very tough and difficult. And Anmol runs sort of electric vehicle companies, so to say. Therein batteries play a critical role. So what we do at Attero is recycling. Essentially, we are a deep tech company with a very strong focus on sustainability. And the outcome of that is 2 business units that we run. One is focused on electronic waste recycling, and the second is focused on lithium and battery recycling. By recycling these end-of-life electrical, electronic waste or end-of-life lithium and batteries, we extract pure battery-grade cobalt, pure battery-grade lithium carbonate, pure battery-grade graphite, nickel, manganese sulfate, along with copper, aluminum, and from electronic waste, we extract pure gold, silver, tin, and 17 other metals, including some rare earths as well, Bhakta, which are sold in India and outside India as well. As a company, we have 34 granted patents internationally across the world, and many more applied for. And we're also the only electronic waste and lithium and battery recycling company in the world to get carbon credits per ton of waste recycled. Happy to be part of this panel. Thank you for inviting us. Look forward to a great discussion.
So Nitin, let me start from you, and the journey question, will be only for you, not for you, Anmol or Bhakta, because I really know what you guys are doing. Nitin, you started your journey long back, really long back, and what you're doing is one of the toughest thing to do, because it's kind of a convergence of applied science and applied engineering both. And that's kind of a rarity, even in today's time, anywhere in the world. So in a very, very short way, what prompted you to do that? But connect that with the perception of adoption of everyone talks about, and most people talk about, and that's a good thing. But the real adoption of solutions which are meaningful, not only from the perspective of a spectrum of climate, but really in terms of geopolitics of rare earth, which Bhakta has mentioned, and also sustainability, which is now core aspect of any reasonable corporate house or industrial house.
No, absolutely, Ravi. So completely agree on the journey part. We did start early on. We started Attero in 2008, right? The objective at that point in time was both Rohan and I, the co-founders at Attero, were enthused by the fact that recycling per se and recycling of electronic waste is a problem that sits in the confluence of technology and sustainability. And that's what's close to our heart and close to our DNA, and sort of looked like a great idea back then. And it turned out to be a great idea, just that time has passed by, right? So, but let me take a step back and sort of try and tell you that any deep tech venture, if you're starting from scratch, given the fact that markets have to be built, markets have to evolve, regulators have to evolve, the tech has to evolve, the business model has to evolve, is a journey, okay? And if you're not prepared for the journey, it's very difficult to sustain that journey. And obviously, it will not be all ups, it will be ups and downs as well. Specifically, if we talk about impact and sustainability and the impact that we are having as a company, plus the global markets. See, 3 years ago, we started looking at lithium and battery recycling as a problem statement. And the reason we looked at that problem statement, Ravi, was very simple, because we were getting a lot of lithium and batteries back as part of electronic waste supply stream, right? When we look deeper, what we did realize is there are 2 problems and basically a lot of advantages, right? First, lithium and battery technology is the best battery technology in the world. largely because of highest energy density, fastest charging time, slowest discharging time. But more importantly, more than $100 billion had been invested in the lithium-ion battery ecosystem, and many more continue to get invested, right? This led to the two problems that we discovered. One, as these batteries become more and more ubiquitous, the amount of waste they create is growing exponentially, and that's hazardous in nature and needs to be treated in an environmentally friendly manner. Second, and equally important, is the fact that at least 50% of the cost of an EV is the cost of a battery, out of which at today's prices, at least 40% is the cost of raw materials that make up the battery, which include cobalt, lithium, nickel, manganese, graphite. Each of these critical battery materials has significant ESG issue and significant supply security issue. Take cobalt as a case in point. More than 70% of the world's cobalt is mined in the Congo region, which is driven by child labor, terrorist regimes, what have you, right? And at the current known sources of cobalt and the current demand, the world will run out of cobalt by 2030. Similarly, lithium, where more than 60% of the world's lithium is mined in Bolivia, Argentina region, which is also considered the world's driest region. Reason is that traditional lithium mining is a water guzzling process. And to give you some context there, to extract 1 ton of lithium using a traditional lithium mining process requires more than 500,000 gallons of water. So when we looked at it, we said if we develop the right tech to solve this problem, not only are we solving the waste problem, but we're becoming significant players in the global battery material supply chain. And that's the incentive.
No, awesome. I don't have any prepared question, but I'm going to take a string and I'm going to utilize, both Bhakta and Anmol. So Bhakta, I'll come to you later, but think about, because, we have always discussed about geopolitics of rare earth per se, and not only the supply chain constraints, but overall availability of finished products, which can become scarce if just because of a dominance of one or other countries. But hold on to that. I like to extend something which Nitin has mentioned to you, and I'll do my own disclosures while I do that. Anmol, we all know that BMS in any shape of EV is 40 to 50% of the cost. We also know that most of the applied science which is happening in the realms of the periodic table, if I may say, is, by the way, let's have an alternate to lithium, which can be a sodium or a phosphorus or so and so forth. Okay, but still this industry is going to grow, and I believe in that. You have created something which is going to run on the breakthroughs which are going to happen both in science as well as engineering, both from the form factor to the material perspective. So want to know your insights or your drive, that why to choose this particular domain. One. Second thing, a disclosure. I'm ex-Tata Sons. And there is a background to your company. What do you think industrial houses are thinking about the applications or the platforms which you and others are building, and what kind of help we can expect from these industrial houses now and in midterm, forget about long term, now and midterm. So two parts of that, because you're the best person, because you're living this. You have to unmute, Anmol.
Yeah, sorry. I got the second question very well, which was around the industrial houses and what are they doing and what we need from them. The first one, if I could paraphrase, is that why did we choose electric mobility, or why this technology to build out? If I could.
Yeah, I'm Nitin clearly mentioned 2 points, and I totally agree with him. Look, if you take any kind of EV today, in any form factor, 2-wheelers to 5-wheelers, any form of that factor. I'm not counting aviation, because then it will become a far bigger number if I talk about electric aircrafts per se. 40 to 50% is directly or indirectly to BMS. Okay, which is an issue, which is an issue both from a P&L perspective, both and also from from running the company and making sure that the product is viable for a long-term perspective. Also, and that's the engineering part of it, right? How to build it and the profitability of the engineering product. But also, most of the applied science which is coming as an alternate to lithium, because lithium has become a geopolitical issue, is part of the periodic table. Again, a part of the periodic which Nitin has mentioned. So you replace lithium with what? Phosphorus, or with aluminum, or with sodium, or something like that. So there are uncertainties and ambiguities on which the products are being built, or the mobility platform ecosystem are being built. So why still do it? Where is the motivation? Where is the driver? And how do you see this? How do you see the future?
So, Ravi, while I mentioned to you, I graduated as a petroleum engineer when I was at college in 2003-7, that was my year. And a lot of people in 1990s and 2000, early 2000s used to also speak that oil will also end one day. And one of our deans, they taught us that, the Stone Age did not end because we went out of stones. The oil age will not end because we will run out of oil. And the lithium age will not run out of because we will run out of lithium. There is always enough materials which are available in the earth. It's only a price point at which you want to pay it. At $100 a crude, there are many more fields which have become active. At a certain price point, there will be lithium which will be viable in India also. So it is not that the lithium ages will end because we run out of lithium. Lithium age will end because there will be a better technology which will disrupt lithium. I don't know which technology will it be, but it will not be for lack of lithium, is what Mother Earth is more than abundant with all. It just needs to come at the right price point. So we at Blue don't actually treat ourselves as great innovators. We are not the technology developers. We are the scale up kind of people, the consumer experience kind of the people. We are wedded to green. We are wedded to cleaning the environment. We are wedded to our consumers doing their good deed of the day by using our cars. But we are not the ones who are going to do deep tech and build out a battery, etc. All we are looking forward to is that does unit economics make sense, and it clearly makes unit economic sense. And for the next 4, 5, 10 years, it looks like it is making economic sense. When we started Blue Smart in 2019, we used to buy a 13 lakh cars with a 110 kilometer range. Today we buy a 210 kilometer car with a 10 lakh price point. So whatever we started off with the thesis that efficiencies will improve and prices will drop, that thesis is still running true, and I don't see the thesis breaking in the next 4, 5, 7 years also. The only from an industrial house, and taking it to the second question, is that the only kind of real technology disruption that we see, sodium I think is still far off, is what people are very often talking about, hydrogen. That hydrogen will become mainstay, etc., and India will become a net exporter, etc., etc. My key thought on that is that I believe that generation is never the problem. Generation of electricity is not the problem. It is always the distribution which is the problem. So will we be able to set up very large scale hydrogen plants to produce hydrogen? Yes. How will we distribute them? It's been 30 years of natural gas in the country, and natural gas is still in maybe 10 cities in the country. It's not in most part of southern India, not present, and not south of Bombay, it's not present at all. So it's a very difficult distribution, even for electricity. It is taken whatever 100+ years to create this large distribution network, and still we know that distribution is the biggest flaw in the electricity markets also. So from a hydrogen perspective, which looks like will be the most cleanest fuel ever, and will be the big competitor to electric, I think we believe that distribution will be a key constraint, and even though generation might happen, reaching it at the nooks and corners will be a big issue. In terms of industrial houses, I think we would request, because the area of focus that we do not have is building out technology. I think it's best left to Tata Motors and Mahindras and others to kind of Reliance and others to kind of deep dive into it and build out the technology. what we at Blue Smart or me as personally are very well adept at doing is that if there's a technology which makes unit sense, take it to the ground, experiment, scale it up, and demonstrate to the world that this is feasible and is no longer a school project. So I think that's what our key expertise lies in. Unfortunately, Ravi, disappointing you, but I do not know anything beyond of deep tech.
No disappointment. In fact, I expected that, Anmol, and I think first of all, thank you for being so candid and so upfront and honest about it. There is an aspect of entrepreneurship where you're obliged to create value, and you're obliged to create value for your customers and for your shareholders and investors, etc. So thank you for that, and you have given all of us enough hint that how to build business while not being invented. Small innovations also matter if you're able to produce applications on existing platforms. So thank you for that, and an awesome example of fossil fuel. Very, very practical thinking. Thank you. I'm going to come to Bhakta, but Nitin, something you may like to think about, because I'm going to pick your brain on which part of periodic table do you see is the future source of energy. So think about that. Disclosure over here, firm, Kalari. And I'm part of Kalari. Vinesh is a colleague, awesome colleague. So that's first disclosure. And Kalari has invested in Chara, which is Bhakta's company. Second thing, Bhakta is a very good friend, and I have seen his journey. Almost from zero, Bhakta, if not minus one or minus two. Bhakta, remarkable journey till now. I'll request you to talk about the passion which you have, and two aspects of the passion. One is rare earth free world. In the context of India, in the context of geopolitics today, that's one. And second one is the China Plus strategy, which a lot of people have spoken for last 12 years, maybe 14 years, and maybe even more. And now, founders like yourself, entrepreneurs like yourself, and companies are giving a viable alternate and a feasible global alternative to China Plus. So please reflect on that, and please share your passion, Bhakta.
Okay. Thanks, Ravi, not only for giving an opportunity, for being an investor in our company and a supporter. So I'll first try to answer the first question about the passion. One of the things, even though we're a very large country with a lot of engineering talent and other talents, I strongly believe that we have still not built a product company out of India, whether in hardware or in software or in automotive. We are still dependent on foreign sources for our critical technologies, whether it is a battery cell, whether it is a motor, whether it's a controller. And that was a big disappointment for me. And after exiting EasyTap, my previous company, which got sold to Razorpay a few months ago, I wanted to do something different, deep tech, far-reaching technology, and hopefully what we build will not only be useful in India, but we could sell it as a product outside India too. So that's about the passion. The other thing is the geopolitical the situation. For old people like me, we have this mental model for the past 75 years or so. After World War II, the whole world, including India, has been dependent on Gulf, majorly OPEC, for our energy, which has led to a lot of issues around the globe. Apart from climate degradation. And if we don't do anything for the next, we'll be dependent on China and probably one more country for the next 75 years for our energy, which will be electric. And that is where this China plus one policy also kicks in. So we need to find an alternate source to enable our transition to this electric future. Actually, I like one thing what Anmol said. That Stone Age did not end because of lack of stone and so on and on. So I think you're absolutely right. So maybe rare earths there is always a price. What we need to do is not only avoid the strategic dependence on one country or maybe a couple of countries, we also need to provide a more competitive solution, a more intelligent solution, because even if the situation on the supply chain of these things change, we should still win out. Actually, that is also the feedback we are getting from our customers. We have signed up large industrial houses and startups as our customers to develop their motors and controllers. We speak about rare earth independence. We speak about control over technology. We still don't build motors and controllers in India. Everything is imported. But I think most of them are coming to us and signing up with us is because our products are cheaper. In addition to being independent of one country, and in addition to being more greener, our motors, because we don't use rare earths, we just use steel and copper, completely recyclable materials. Nitin, so our motors, when it comes to we don't have magnets and rare earths and all that. You probably know, I shouldn't be telling this to you, steel, copper, aluminum are the most recyclable materials. So I think all these things are coming together. And in some sense, technology is the solution. So we now have technologies, powerful algorithms, powerful processors, powerful power electronics to make this a reality. So we'll not only enable this transition from an hydrocarbon to an electric energy future, we also build something that is green, also build something that is, we can proudly call it made in India and made for the world.
Thank you, Bhakta. I'm just conscious of time. We have 15 minutes. So we have a lot of time. We have 15 minutes, but I see a lot of raised hands. And Vinesh kind of told me that Ravi, we have to basically end this on time. So I'm very conscious of that also. But Nitin, Anmol says that hydrogen is going to be the future. Bhakta says that he's going to eradicate at least few elements out of the periodic table, and they are not going to be valid. Okay, so quick reflection on that one. But I want to basically come to the point and ultimately the core point of this particular conversation, which is and there I would like serious recommendation. So please recommend and please prescribe but after reflecting on that how important is capex and what are the stories of capex whenever it comes to notion of building not only deep tech companies but companies like yours or like Bhakta or like Anmol. But first reflection on hydrogen and some of the elements Bhakta will. So let's challenge them back, Nitin, if we have any scope. We are deep.
No, thanks, Ravi. So see, Ravi, from my perspective, okay, the fact remains that our Earth will always be resource constrained, right? And to the point that both Anmol and Bhakta have made previously, resource constraint doesn't mean the resource is going away, but the cost of the resource is increasing day by day because we are figuring out the total cost of ownership of that resource, right? So that's the trend of pricing, which is driving it, making it more expensive. So that's a fact, right? technology development and R&D and deep tech is working on two parallel activities. One activity is how can we do away with elements or metals or non-metals which are resource constrained. So we develop products which don't depend on them. That's one way that R&D is taking shape. For example, in case of batteries, we started with lead acid battery, then lithium ion battery because they're more energy efficient and so on and so forth. Now we're talking about replacing lithium with sodium, with various kinds of types of metal air batteries and so on and so forth, or even hydrogen, right? All of these are possibilities. And I don't think what Anmol said is wrong in any of those, right? The second aspect is, given the same resource constraint, given the fact that we want to keep the total cost of extraction of that resource minimal and not damage the environment, how can we use more and more recycled content and make it a more circular economy, right? That's the second aspect of technology, which is where we focus on, right? So just as a case in point, by our lithium and battery recycling technology, in the next 5 years, we'll end up ensuring that at least 15% of the world's lithium demand and graphite demand is met by recycled output, our recycled output, okay? And that's a very tall claim to make because every single percentage demand that you replace from mining is a significant carbon footprint reduction. Today, more than 90% of graphite in the world comes from China, refined graphite for batteries, right? The carbon footprint of that graphite versus the carbon footprint of recycled graphite that Atero produces, there's a 20x difference, okay? Now, if you calculate the cost, obviously our pricing can be much higher. So that's the point. So not to challenge both Anmol and Bhakta, it's a journey. It will continue to go on. New technologies will come, new business models will evolve, and people have to figure out what needs to be done going forward as well. Coming more importantly to the CapEx side of things, Ravi, in my opinion, this entire notion of CapEx intensity is a misplaced notion, okay? CapEx in itself is not a bad number, okay? What is bad is a return on capital invested. If your return on capital invested is low, then obviously something is wrong with the business model. Whereas if the return on capital invested is high, then you might do as much CapEx as you want. Okay. Again, coming back to that point, if you spend 100 crores to build, let's say, whatever facility you're building, and you're able to generate that 100 crores in 2 years, that's an awesome business model. Right? So some people might say it's CapEx intensive, but I look at it and say it's a great business model to be in. It's not CapEx intensive. So I think it's a misplaced notion from that angle, Ravi. Specifically from Atero's standpoint, a case in point, the CapEx that we have for, let's say, building a lithium battery recycling facility or an e-waste facility is at least 20% cheaper than anybody else in the world. And these are automated facilities, the most cleanest, greenest facilities, and so on and so forth. So CapEx is just a number there, Ravi.
Awesome. Thank you. Thank you. I'm going to stretch this discussion and I'm going to be on this, CapEx. And naturally, I will flow that to you, Anmol, because you have built something and there's a direct relevance. You know, a lot of people do ask this question, but you're living this particular question that what should be the equity capital? What should be the proportion, utilization, assignment of a equity capital for a capex in your kind of a business, and few entrepreneurs who are just on the verge of starting or they have met few advisors or few people, they basically come confused and they do ask this question: then how do you leverage blended finance for the right mix of capex and opex in a business similar to yours or similar to Nitin and similar to Bhakta? So just reflect on that, and if you can be very prescriptive, that will really help Anmol.
Sure. So first of all, on being capex intensive, I think at Blue we decided we are going to be full stack. By full stack means we're going to be owners of the cars, owners of the charging stations, etc., etc. So just to put it in perspective, today we have 2,700 cars, 1,700 charging stations. All this is about 400-500 crores of capex, which has got incurred. But this is just the start of the journey. We expect that we are going to do next year in 24 about 10 times of this. So that's very large numbers that we are talking of. I think I would really want all young entrepreneurs to not focus too much on whether the business is capex intensive or capex non-capex intensive. I think in our heads, we were very clear that the gig model is out. I think the gig model works when there is sufficiency of assets. Airbnb works because there is sufficiency of homes which can be rented out. cars, ride hailing will work if there is sufficiency of cars. If there is no assets on the road, what do you become? What do you aggregate? So I think in this, there has been the last 5, 7, 8 years has really not seen any asset creation on ground, and that's where we are seeing that aggregation businesses are not shaping up, and that's where full stack businesses are again coming back, and that's what I clearly believe in, and that's the founding thesis of where Blue is. Having said that, I think we decided that we are going to be like full stack, and that's going to require a lot of money, both debt and equity. Debt has been pretty easy to come by. It's not been difficult to come by. We've had, in fact, it's been more than forthcoming for us to come, because it's chasing the right cause. If you can generate a decent yield on debt, and what I mean by decent yield is anything, if you can even touch double digits, great. Even if you are single digits, half of our debt is at 8.5%, which is very substantially lower, about 150 basis point lower than 10%. It's very good. So if you can generate slightly good yield, 8.5%, 9% for your debt investors, have we give them a reasonable assurance that this business model is working, and the repayments will be on time. I think there is more. If you're chasing 1 rupee of equity, you can easily get 10 rupees of debt. It's debt is easily flowing, available. No reasons why it is not available, and it is available. And I have to share this with you that 80% of our debt is actually PSUs. It's not even the new age fintechs or anybody else. 80% of all money that we have used to set up charging stations and cars is all PSU money. So it's all in there. I think we just need to have the right cause, and I think there's a competition amongst PSUs who finances green the most, to take benefit of that and raise as much money as you can from public sector undertakings, because they have the largest check sizes in the country. Nobody can match their check sizes. So from that perspective, it's been not very difficult. Given on what should be your debt equity structure, etc., I would say till the time you can suffice your debt with operating cash flows, keep equity. Equity should only be as for exigencies. Actually, if you can raise debt and service it from the asset itself, like what Nitin was mentioning, you invest 100 crores. If you have a payback of 2 years, great. Get 1,000 crores more of debt, because that would mean that you're generating so much alpha on it. So it will all depend. If you can service debt from the operating revenue of your asset, nothing better than that. I think just go to the hilt. Then I once met a very, very large conglomerate which is known for very high debt levels, and the CFO said, Anmol, anybody talks about debt equity, throw them out of the room. You don't have to talk too much about it. If you can, but the only thing being that if you can service debt with the operating cash flows of the asset that you are creating from it. If you cannot do that, then it's a big problem. Then you will stutter into a kind of crawl into a bankruptcy very soon. The business model, the unit economics need to be such that revenue from operating cash flows from the asset need to suffice for repayment of the debt. And if you can do that, take it to as high as possible. There is no limit for it. Equity, keep it for exigencies, 3 months, 6 months, 12 months, whatever is the comfort of the founder. Some founders are comfortable with 6 months of equity in the bank. Some are comfortable with 12, some are comfortable with 24. I would say that's a personal choice, that how would you want to live by. We were comfortable with like 12-ish months, and that's why, in spite COVID, etc., we were able to survive and live through all the obligations that we have. We were the worst impacted sector in COVID. So I would leave that. How much equity you need to have is a founder's choice. Debt take only if you can service through the operating cash flow of your asset.
Thank you.
Sorry to interrupt, but I just want to doubly say the point that Anmol made here. The debt equity portion, and like Anmol really put it very well, don't take debt till the time the product market fit is there. Don't take debt till the time your operating assets are generating enough cash. You'll have so much pain, it's not even worth it. Okay. But once that product market fit is there and your operating cash flows are there, use debt to maximize your returns, right? So completely agree with Anmol. Sorry for butting in between.
No. Thank you for doing that. I totally agree. Loved Anmol. I loved several comments, but I'm partial to what you have said. My last corporate job, I was building an airline. So this aggregator thing really is something which I can relate to, and the capex and the equity and debt and the significance of that during different life cycle of the company, right from incubation to when you really start making money and you have to scale up, and then again it becomes so but this has to be handled if you really want to build a large company, and you can't build a large company without capex. Frankly, in the domain we are talking about, which is a domain of impact and impact where you're building stacks from scratch for global usage, and it hasn't been done before or in that true shape or form, both from an applied science and engineering perspective. So brilliant. Thank you so much. Very useful. I learned a lot from that. And Bhakta, again, the capex thing, but in a different one. You're building something which is going to be utilized in multiple industries, Bhakta, right? Which is not multiple domains, multiple sector, multiple industries. So first, your take on capex for your own, but also extend it. What kind of what industries do you believe are going to create sustainable solutions earlier than other industries? They will adopt, and you can take your own example, Chara's own example. But first, what is your take on capex for the kind of solutions which you are building, which is for multiple sectors? And within those multiple sectors, which sectors do you think are going to build a next set of sustainable solutions in next 12 to 14 years earlier than other sectors?
Yeah. Thanks, Ravinder. So I say three things about capex for companies like us. So we are building a technology which has not been done anywhere else in the world. So it is something very deep tech and hopefully far-reaching. So with respect to capex, we are not like Blue, wherein they need a lot of capital to deploy. What we need is a core team of engineers and a little bit of equipment to build our tech. And we don't need a huge amount of, we're not talking about hundreds of crores of capital. We need a small amount to prove our tech first. So which is kind of available now in India, I believe, with the right for the right applications. The second thing is, it's irrational belief that if you have the right idea, if you have the right solution, capital always comes to you. I think that part is always true. It's hard, but it is still possible. We're always dreamers. And the last one is, as probably all of you will agree, going green has become a business now. So there are both venture and debt is available. Which is good. Where do we see the largest effect of our technology? EV being a growing business, that is where we are seeing the largest market fit. A lot of people are talking to us, and that is where we will see the first deployments of our technology. And the second one is in the HVAC industry, air conditioning industry. By the way, these two things have something in common. Which is that they're one of the largest consumers of energy too. So we need to make them more green and efficient. So EV and HVAC is where we want to make the largest dent, so that our planet will breathe a little bit easier.
Thank you, Bhakta. Vinesh, do we have time for questions? I'm just, I know several raised hands are there. There's several questions, but do we have time for questions, Vinesh?
Yeah, we can probably take 2 or so to wrap this up by 6, so that we do justice for the next panel.
So why don't you just spell out those questions, since you have there are several of them over here, but just point it to Anmol, Bhakta, or Nitin, whomsoever has this question being asked.
Yeah, sure. I think, and a lot of people end up asking, and even I end up deliberating, right? In capex businesses, how do you really solve for, convincing investors that you will be able to reach product market fit, and at the same time, ensuring that you end up raising capital, because everyone, anytime you go to an investor, they typically say, have some PMF or at least early PMF, and then we'll give you money. And then when you need capital to do that, so anyone can take it. Feel free to kind of take it as
Just
you.
before that disclaimer, I don't do that. Just a disclaimer. But but Vinesh is a better venture capitalist than I am. That is another disclosure. But thank you. Thank you for asking that question.
Yeah, at least I can start maybe by saying that from our end, the two thoughts. One, there'll always be investors who will be happy to invest at concept, and that's why the huge concept of angel investors, startup investing is there. I would say that at BlueSmart, before we actually did our first institutional round, we raised 100 crores plus in angel investments. So I think we can proudly say that we raised maximum amount of angel investments that any company in the country would have done. I think every platform, everywhere, because this was a unique concept, and we were going against two very large companies, so needed a and COVID was there, etc., etc. But so there will always be those early investors who will believe in the founder, who will believe in the concept, and that's where it becomes slightly more easier. But yes, PMF for sure has to be there. I think I can just share with you, till the time our first institutional money came in, we were at just 400 cards. So we were trying to improve unit economics on those 400 cars, and keep iterating with what could we do better, because 400 we thought was not a small number, was not a very big number, was a number that we could afford of. And once we knew that, we are now getting adoption, and every incremental car on the road is just creating positive network effect. That's the time, and God was kind, we were able to raise institutional money, and that's the time we just took it to the next level. So yeah, kept it small and affordable till the time we didn't have PMF and unit economics. But once we had it, then we're just trying to scale it.
Awesome. Any other comment or any?
I'll give you my version of this. When we started on this journey in 2019, rare earths was not part of common lingo, and there is always an element of luck. I think COVID came, and we were continuing our work, and then people realized the bad boy called China, and everybody started talking about rare earths. So for us, it was a little bit of a luck that people said, "Oh man, we should start doing something about rare earths. It is a nationally strategic problem." So that was our story. We would have continued, COVID or not, but COVID gave us a little bit of an advantage.
So Vinesh, just to add some different angle to this entire capex and product market fit perspective, right? See, till the time every single money that you're spending is not value accretive, or you've not got the product market fit, you have to scramble around and figure out what is the least amount of money you need to get to that stage, and get that money from wherever you can get it from, whether it's from angel investors, whether it's from grants, or whatever it is, right? But you need to get that minimum amount of money, and that minimum amount of money will depend on the business model you're trying to build. Okay. Once you have that, and once you get to the product market fit, then use leverage and institutional equity funds to scale.
No, very grounded, very practical. Love that comment. Vinesh,
Yeah, thanks for that. Just one last question, and then I think we can wrap this up. So quickly, I'm just kind of reading it out because it's a little long, but essentially carbon emission from electricity generation is around 3 times when compared to carbon emissions by road transport. So technically, are we just shifting the source of pollution, or are we really ending up solving this kind of pollution, right? So again, feel free to take it, whoever wants to go first. Yeah.
Yeah, so I'll start with that. Probably then Anmol and Bhakta can join in. Essentially, if you look at the life cycle analysis of an electric vehicle, okay, life cycle analysis essentially means that the amount of energy or the carbon footprint in producing that electric vehicle, in selling that electric vehicle, in using that electric vehicle, including the carbon footprint of the energy that you're using to drive that electric vehicle, and at the end of the day, disposing of that electric vehicle, right? What is the total quantum of energy used across the entire life cycle of this vehicle? If you compare the life cycle analysis of an EV versus an IC engine, with proper end of life recycling put in place, where you're recycling, extracting majority of the metals there, the life cycle analysis of carbon footprint of an EV is much lower than an IC engine. Okay. On the other hand, if let's say one of those things don't work out, for example, you have huge amount of, you have a bad recycling technology, then IC engine is better off, right? Or you have a huge carbon footprint in manufacturing, then IC engine is better off. But as things stand today, an EV from a life cycle analysis perspective is much more environment friendly than an IC engine. So it's all about alternatives, in my opinion.
Yeah, I think first of all, I disagree with the data. I don't know which data source is being quoted. I completely disagree on the data source. We have done enough analysis and would want to mention that at BlueSmart, we've not done carbon emission analysis on our own. They have been verified by internationally appointed agencies, because carbon emissions, one, is a very important source of revenue for us, and two, a lot of our investors who are basically climate focused funds are investing in, because they have a very strong, extremely strong element of how much carbon are we saving or we are not saving. So 3:1, I would actually say it might be the opposite of it. So which data source is there? I would not agree without looking at it and without deep diving into it. I would not agree to it. Two, I think we have to understand two things. One, the fact that electric motors are the most efficient form of energy transmission. In a combustion engine, you are converting chemical energy into mechanical energy, then there are multiple energy forms which get changed, whereas this is much more cleaner and much more efficient. You can do combustion engine efficiencies are 17-20%, motors are much higher than that. So just from a kilocalorie basis used to transport one person for 1 kilometer, the kilocalorie itself is much lower, 30-40% lower. So that would, in fact, anywhere the source of energy is, it would just mean 30-40% lesser emissions, because energy used is 30-40% less. But given the fact that the grid is being greened every day, I think India is on a big mission to green the grid. So we are doing very well over there. Very importantly, extremely importantly, about 2 months back, the Indian government has passed a law which allows us to source green energy for all our charging stations, which would mean that before end of this year, we would have massively converted a lot of our charging stations to 100% green power. And then this question, which is the largest question that I always keep asking myself and keep trying to answer, is that are we a zero tailpipe emissions company, or are we a zero emissions company? Because today we are a zero tailpipe emissions company. We are not a zero emissions company. Whenever we move to 100% green energy, which has now been allowed by the parliament, and by December, most of our charging stations would have gone 100% green. We would then be proudly saying that we are not a zero tailpipe emission company. We are a zero emissions company. And that's what that is a very important and critical part of what BlueSmart is trying to solve.
I'd just like to add one quick point, as Anmol said, once the generation becomes more green, solar and wind, your point, Vinesh, will vanish. It is green source of energy. But as you know, there is erratic supply due to solar and wind. But I think there is this technology called V2G, vehicle to grid, wherein I think that will be the killer. As more and more cars get deployed, they will not only be used as taking you from point A to point B, they're actually carrying energy. Whenever there's energy from sun and wind, they take it, and you just do a plug-in into the house, and they can actually power up the house. The classic distributed energy system. I think V2G will be a big deal, which will kind of negate all the arguments against electric vehicles that are prevalent.
Thanks everyone.
Yes. Any other question, Vinesh? Or I'm going to just thank.
Yeah, I think that's pretty much from our side, Ravi. Maybe you can just give in the closing statements, and then we'll have the next.
Look, remarkable entrepreneurs. So no closing statements over here, except gratitude and thank you. Look, I learned a lot. I kind of repeat the same thing how I started. There are entrepreneurs, and there are entrepreneurs who are passionate about impact, and impact which either participating making civilization better from the aspect which we talk about, and the longevity and the health index of quality of life. And life doesn't include us, life includes everyone else. And then there are entrepreneurs who are creating future platforms which are profitable and going to become large, hopefully large institutions, more than just an organization. Nitin, thank you. We will have our own discussion on attributes of periodic table as the future of energy. That's something I'm passionate about. Bhakta, it's always an honor and privilege to talk to you, to be associated with you, and I feel blessed, to what you and everyone else is doing. And Anmol, I have, trust me, I have followed you and followed your company for a very, very long time. It's very important for engineers like me or deep tech stack companies to understand that simple applications have to be created on those stacks for the sake of deep tech stack itself. So thank you for doing what you are doing, and thank you for finding time and sharing your views very, very candidly and very, very effectively on this particular gratitude. Thank you so much. Thank you.
Thank you. Thanks, Ravinder.
Thank you, everybody.
Thank you.
Thanks, everybody. Bye.
Bye.
See you.
Thanks, Priya, for that email. Very well
Hi, everyone. We'll just be starting with our next panel, which is, Priya moderating. And we've got three speakers talking on energy, climate, carbon credits, and, a little in terms of how does India's potential look when it comes to clean energy. So we'll just have them now come on stage. So I will just ask them to do that. Look forward.
Hi, good evening, everyone. I think we're just waiting for one more panelist to join, and then we'll kickstart. Great. I think we're all here. Thank you so much for joining, everyone. This is the next panel on the Kalari Net Zero Summit on India's potential of clean energy. It's a pleasure to be here. Thank you so much to the Kalari team for organizing this summit on such a relevant and thought-provoking topic. I'm Priya Shah. I run Theya Ventures, an early-stage climate tech fund based in India, and I'll be the moderator for today's panel. Very fortunate to be joined today by a group of incredible panelists. These are all very passionate founders working across diverse areas of the climate tech ecosystem. Before I introduce each of them, I'd just like to share that in terms of the content of this panel discussion, we've seen that the previous panel focused on the theme of scaling up CapEx intensive models and was quite business specific. In this panel, we'll be exploring the big picture of the clean energy transition for India, cross-cutting across various sectors, covering policy commitments at COP26, COP27, as well as UNFCCC pledges, industrial and consumer adoption, and then finally, how soon can we as as a country reach net zero. So without further ado, we have with us today Siddharth, the CEO of H2E Power Systems. Siddharth comes with over 23 years of experience in international ventures and clean energy, real estate, and agriculture. H2E Power Systems is developing India's first totally integrated hydrogen fuel cell, three-wheeler using proton exchange membrane fuel cells and innovative hydrogen cylinders. We also have Arjun, CEO of Smart Joules, which is an energy efficiency as a service solution for commercial and industrial buildings with a particular focus on hospitals, and which also guarantees energy savings to its customers while enabling them to avoid large capex outlays as well as accessing retrofits powered by a technology platform. And then we have Siddhant or Sid from Climbs, co-founder of Climbs, which is a platform for brands, companies, and consumers to neutralize their carbon footprint through nature-based projects such as reforestation, waste management, and others, and manage carbon sequestration. So with that, I think we can go ahead and dive into the various topics that we'd like to address today. So with all of you, you have a unique vantage point as founders with the different areas in which you work in terms of the sectors within climate. And I'm sure that you also have studied models outside India as well. So given that India has a particular place in the global climate problem, without India, there is really no solution to this problem. I'd like to spend a little bit of time perhaps discussing some of the special advantages or attributes that India has as a climate solutions provider, as a country in terms of natural resources, whether it's forests, minerals, agricultural land, renewable energy, and also demographics. By 2023, we're projected to have the largest population globally. We also have an evolving venture ecosystem, and we have really strong talent. So which particular ingredients, in your opinion and from your particular vantage point, would be most crucial to helping India manage the clean energy transition and seize this moment and become a global champion for climate? So perhaps I can start with you, Siddharth, and can help us just understand from your view, what would be some of the things that India already has at its disposal as a country to address this large and very important problem?
Thank you, Kalari Capital, and thank you, Priya, for that introduction, and also for moderating this session. I think we have a very interesting panel, and it's going to be an interesting discussion. Talking about where India is and how India can get things done, I think we have to go a little back in the history. So if you look at the ancient and the Vedic philosophies that India has always been, propagating, we've been always one step ahead when it comes to sustainability, when it comes to being responsible towards the climate or towards also the environment. So that is, I would not call it a baggage, but a legacy that India already carries. And the way the geopolitics is shaping in the world, I think a lot is happening, especially post-COVID and then post-Ukraine war. Countries have become very vulnerable, especially the European countries. You have seen oil prices go up. The gas prices have gone up to an extent that gray hydrogen in Europe was at $2 pre-Ukraine war. Today it is at $13. So, that's where it is moving. And with the large-scale solar potential, wind potential, hydro, and also the bio-waste. See, India has a large population, which sometimes is a liability, but if you look at it from a climate solution space, it can be a big asset, where all of the waste that we produce as a country can be converted into usable gas. It could be synthetic gas, hydrogen, or pure methane. And India, over the next 15 or 20 years, has this large potential to not only take care of our own needs, but also be able to export the power, export ammonia or export hydrogen, export different derivatives of this fuel. And very significantly, with the G20 leadership coming to India only 4 days back or 5 days back, I believe, India is going to be at the center of things. I'm told that we have the G7, G13 members visiting India already in February. So showcasing the Indian capabilities, and these capabilities not only in the renewable side, but also building of electrolyzers, building fuel cells, building technology solutions that can go for each of the industry segments, or even provide for exports, is going to be an important step for India. So from where I am, and we've been working on this whole hydrogen space for the last 13 years now, and I see India becoming one of the key players by 2035, and definitely a leader by 2040 or 2045. So we are on the cusp of a very big opportunity where India can regain the position. India pre-British was known as Sone ki Chidiya, and India taught the world trade. India taught the world a lot of commerce, education. So we are at that point where we can get people to adopt greener and more sustainable forms of energy.
Great. Thank you so much, Siddharth. That was very insightful and gave us a very good understanding on the role that India can play globally, taking over the G20 presidency and actually setting an example for other countries in managing the climate transition. So Sid, would love to hear from you, on looking forward. What other attributes do you think, in your opinion, that India can really use to their advantage, particularly looking at technology, financial markets, carbon markets, given your particular role in that field, and how can we help countries, more developed countries, realize the potential that India holds?
Absolutely. No, thanks. Firstly, thanks, Priya, for the wonderful introduction. And it's good to be back at the Kalari platform. I think I was on the other side hosting some of these events a couple of years ago. So it's good to be back now as one of the panelists. So thank you, Kalari, for the opportunity. Priya, coming to your question, right? Look, the green energy transition, or in that sense, the transition to any cleaner alternative requires a lot of capital to be channeled into it, right? And at least at Climbs, what we believe is, that there is domestic capital that can be raised for these purposes, but more importantly, there is international capital that needs to also come into this market, right? And one of the beliefs that we have is capital should be moving from the global north to the global south, right? And while there are folks like Siddharth and even Arjun and a bunch of other entrepreneurs who are working towards the clean transition, what we do believe is, there needs to be one clear financial incentives for them to accelerate that transition to the right kinds of technology support to showcase the amount of carbon avoidance and removal they're actually bringing, right? I think all of it, the aid to cleaner transition is because we want to avoid anthropogenic emissions and all of the emissions that come through consumption, right? And how do you prove carbon avoidance and removal is also equally important, right? So I think to summarize it, I think there needs to be more and more capital that needs to come through, and also the right set of technology infrastructure to pipe that layer of capital, right? And also demonstrate the potential that these folks are working on, right? And it's not only in areas like energy, right? But if you look at it, the transition to cleaner alternatives is happening broad-based, right? Whether it's manufacturing, whether it's agriculture, whether it's transportation, right? Every industry or every sector is undergoing that transition to cleaner alternatives, right? So obviously there has to be like existing financial instruments that cater to greener alternatives, which I think is happening at a macro level, whether it's private equity funds, private debt funds, right? I think they're being more generous to climate entrepreneurs this decade. I guess they also realize the urgency that is the climate crisis, right? But also I feel like there will be more and more innovative tools that come through, right? And we firmly at Climbs believe that, for entrepreneurs that are working towards solving the climate crisis, if their business models are still not as sustainable as their fossil fuel alternatives, they require incentives, right? And the carbon markets is the right incentive in that sense, right? And Arjun over here has also co-founded Sasmafia, where they've aggregated close to about 75 sustainability entrepreneurs. A large part of them, while they're really doing good from a sustainability lens, to get to unit economics positive is still a little bit of a challenge, right? Can we incentivize some of these entrepreneurs through the carbon credit ecosystem? I mean, last decade, from 2010 to 2016, or we saw a lot of renewable entrepreneurs, aid carbon credits or use the carbon credit ecosystem to justify a 1.5% bips increase in their EBITDA bottom line, right? So we do believe that, innovative solutions across regenerative agriculture, energy efficiency, direct air capture, green hydrogen transition, green cement, green steel, all of them through the course of the next decade require a robust carbon credit ecosystem and a good financial sort of support, right? That will aid this clean transition. And a large part of this technological innovation is coming from India, right? Previous decades, we would sort of get that innovation from global countries. And like Siddharth said, right, a lot of the innovation is now happening homegrown. And, if we could channel some of this carbon credit capital from the global north, right, to some of these interesting entrepreneurs who are innovating, I think that is something that we at least at Climbs believe is required. The transition to climate is, whether we like it or not, capital heavy sort of transition, and any sort of new financial instruments. I think we see a lot coming through in the regenerative finance space as well, right? For projects in agroforestry, in regenerative agriculture to aid biodiversity losses. And if I take a decadal view, right, blue carbon, algae farming, all of them will start to look very, very positive from a unit economics level. And with the right side of incentives for them, we feel like the aid towards carbon removal in India is something that is going to be a must-have and not a good-to-have. And Indian entrepreneurs are daring to go out there and investing into carbon removal as well. So I think it's exciting times for us, to help aid this transition, and hopefully the systems are far more robust and transparent than previous decades. I think there was some issues previously, but hopefully with the right kind of stakeholders, and with India like taking a big lead both at COP26 and COP27 and now G20 as well, we think that we are positioned at the right sort of era of driving transparency towards carbon credit in financing in India.
Great. Thank you so much, Sid, for that extremely thorough response. I think it's definitely very encouraging to see how far India has come, as you mentioned, from previous decades to now, how ready the entrepreneurial ecosystem is, and how capital is also ready to take those bets on early stage founders and then make those innovative different types of business models cross-cutting across these sectors beyond the energy transition. So thanks a lot for that. So Arjun, I'd like to turn to you now to understand a little bit more from your perspective. You've also been in the climate space a long time, long before it was called climate, more clean tech. And also, as Sid mentioned, you co-founded SAS Mafia, the founder-centric community around sustainability. And just curious to understand your thoughts on, aside from what Siddharth and Sid have already mentioned on India's unique attributes to be a climate leader in the global ecosystem, what else do you think India has at its disposal to its advantage that we can rely on?
Thanks, Priya. I think it's three things. It's Baniyas, Gujaratis, and Marwadis. So, it's going to require a lot of really smart entrepreneurs to be able to position India as a leader. And I think we have those in abundance. That's part of why SAS Mafia came about. And I think very promising signs there. But if I look at my regular business, for-profit business, Smart Jewels, then I believe it's three other things. And that's design, data, and life cycle economics. So what I mean by that, I think, our systems, India has an opportunity to build right the first time because most of India hasn't been built yet, right? Most of the buildings and factories that will exist in 2050 are not even there yet. So we have the opportunity to cleverly use good design, and we already know how to design facilities that are 80% better than the average building that exists today. So, on one hand, we can produce 80% more energy and have it be clean, or we can just reduce the demand by 80%, right? So I think the first is design, right? Good design that can help you achieve extreme efficiencies. And that is luckily a trainable skill and something that we have in abundance. All we have to do is look at our history, look at how our monuments were constructed 200 years ago. If you go inside an old monument in Delhi or Agra in the peak of summer, you don't feel hot, but you feel hot in your house, right? So I think the first tool is design. The second one is data, because the second kind of real opportunity to make a big difference is to use information for your own benefit to make things better and more efficient, right? So imagine, like, right now we are operating our facilities with thumb rules, right? We have a number of operators who are very good at troubleshooting and day-to-day operations and doing standard things, but as we're trusting them to do thermodynamic calculations 24/7. That's not right. So those things can be automated. They can be done by using real-time data to produce, again, extreme efficiencies. And then the third one is really life cycle economics. It's very simple. If you look at any system like a cooling system or a heating system or any of these large systems that consume a ton of energy, most of the energy consumed in our buildings and factories is for these kind of end users. If you look at their life cycle cost, the biggest cost is energy. 80 to 85% of the cost is energy. And at the same time, we are all looking at capital expenses and we're looking at manpower costs. Now, we as Indians are already very good at frugality, right? So we just use that primal instinct of ours, which is to be frugal, but we apply it to the long term instead of the short term, right? We apply it to life cycle cost and say, okay, well, the real trick here is to minimize my energy cost and not really worry that much about my capex. So I think the third opportunity is business models that put the attention and the focus where it belongs, which is the life cycle, and get rid of this short-term thinking. So I think these are the three tools, and I have no doubt if we do a good job in these, using the Banias, Gujaratis and Marwadis we have, that we'll definitely be on top.
Oh, great. Thanks a lot, Arjun. Those were excellent insights, and I think very kind of close to home, brings a lot of this very real. And I think, there is definitely that potential for the innate instincts of what we have as a population, as part of our inherent heritage, to help us go forward and harness all of these attributes to build that robust, solution towards climate. So I think this could be perhaps a good segue to talk about what are some of the challenges for India to achieve its net zero targets. India has set a goal for 2070, but there are various different climate risks, and even other types of risks, technology risks, infrastructure risks, adoption risk, both industrial and consumer, availability of capital, etc. So curious to understand your views on what challenges still exist, if we take this decade as a new start, leaving sort of the previous kind of experiences behind, but just think about, in terms of the policy, the industrial, the consumer awareness, etc. Where are the gaps that still exist, and what can be done either by policy stakeholders, through tax baits and planning, or education or skill-based development? Any sort of ideas from your end? And yeah, we can start with you again, Siddharth, if that's fine. I think you might have to unmute. Yeah.
Thank you, Priya. Like Arjun mentioned, with the Banias, Gujaratis, and Marwadis, capital, I don't think is the challenge in the times, or in the story that we are looking at. The biggest challenge that I see in this entire energy transition and implementation of the green technology or the green way of life, capital, like I said, is not that big a challenge, but the behavioral change. So even today, if as a real estate developer, if you put a building and you say that you don't have the grid connect, nobody will come and buy the house. If you tell them that you have put a fuel cell, you have put a biogas plant, you have put an electrolyzer, you're going to generate hydrogen, and you're going to power each home with a fuel cell, nobody will come and buy the apartment, because it's still in the mind that if you don't have a grid connection, then you cannot live. Or plus the grid connection, you need to have a DG set as well. So it's more the behavioral change which will have to come. And I always say this at H2E, including for our associates or our vendors, customers, that each one make one. So each one has to make sure that they convince or they put together this whole green agenda to the next person. So it can be a coffee table discussion, it can be a discussion over a dining table. But this is, I think, very important. The other part is, of course, skill development and education. Whatever technologies we are developing, I've been looking at what Smart Jewels is doing and also what SID is doing. But all of this work without having the right kind of people to implement this on the ground, because at the end of the day, it is 1.5 billion people who are going to use these technologies. So you need to have the right kind of installers, you need to have the right kind of engineers who can deal with this. So till the time our engineering schools do not produce like 50,000 engineers who are climate enabled, enabled with climate technologies, till the time you don't have a lot of installers. There's something that I'm doing as an initiative within my company is to develop 100,000 Urja Udyamis, and these in English mean energy entrepreneurs. Is to develop that skill so that these 100,000 people can then get into rural villages and or even areas. If you're in Bangalore or Bombay, they can take one area, each one make one. So they'll be able to implement these technologies and help people get to net zero. So when you talk about 2070, I personally believe that the way India adopts to technology, the way we adopted to mobile technology, the way we've been adopting to a lot of new age technologies, maybe India can achieve net zero already by 2050. We are looking at becoming energy independent by 2047 already. And I've always said this, that, unless you have Swadeshi Urja, you cannot have a Swavalambi Bharat. So you have to make energy in this country. Otherwise, self-reliance is a big myth. So I think these are two areas, the education and literacy on climate responsibility or climate technologies, behavioral change or the behavioral patterns. So your films can talk about, climate responsibility. Your Amitabh Bachchans or Sachin Tendulkars of the world can speak about these things. They can come on panels like these, and they can actually talk about what being climate responsible as a citizen means. We can always talk about that because we are passionate about the story. We live this, it's in our DNA. But if an influencer speaks about this, if there are 10 questions on climate responsibility at KBC, for instance, that is going to, start that movement. And then once that movement starts, then in India, things just move. And I think to aid all of this, to make this all happen, is the policy framework. There has to be will at the top. And not only at the level of the Prime Minister, but the level of joint secretaries, the implementers, within the bureaucracy. That's where things sometimes get stuck. Fortunately for India, they are not getting stuck. Even at the bureaucratic level, things are moving very well. And I think that is one of the most important parts. We as entrepreneurs can do our bit. We are running against the tide and we do whatever we can do. But unless you have a policy push on something as important as energy, this will not work. And last but not the least, I always believe in this, that whatever the government is trying to do on a policy level, we always suffer on a technology front with the L1 curse. So when you're looking at mass propagating a technology and you have a tender where the L1 guys get the tender and not the T1 guys get the tender, that's when the wrong parts of technology come into play. The technology gets a bad name. Somebody makes a quick buck, but technology gets a bad name. And then it takes about, a decade for the technology to come back. So a combination of all of these put together, and India, I mean, as I said before, and the fellow panelists also said that we are at a very vantage position today. With whatever is happening with China, what is happening in Europe, vis-a-vis Russia and Ukraine, India is going to emerge as a partner of choice. It's just yesterday that Joe Biden made a statement that India is a valuable partner. Very rarely that we hear that from our friends in America. But, these are the geopolitical facts you are living with. If you take cash on this, and if you do not put this entire ecosystem in place, I think we will only have ourselves to blame in the future.
No, that was very well expressed. Thank you, Siddharth. I agree with you completely. I think energy interdependence and having consumers, creating that level where consumers can actually understand how to transition to cleaner products and giving policy stakeholders that ability to kind of plan for the future and having, being recognized as a global climate leader is definitely something that India needs to do. I think we're well positioned for that. In terms of just the consumer piece, so Sid would love to hear your thoughts, because we are at a time where technology is ubiquitous. Younger consumers are becoming much more aware about climate action and adoption of different behavioral elements, like as Siddharth was mentioning. How important is it right now to pay attention to some of the gaps in the data that helps us make these important sort of climate action decisions? So we hear terms like greenwashing and transparency and accountability and global standards that are credible. What kinds of things should we watch out for, as we go through this climate action transition for consumers, to make sure that we don't fall into any of these traps as consumers?
No, absolutely. I think Siddharth brought up a relevant point, right? We all could work towards climate-friendly solutions, but if there's no behavioral change, one, and two, there's no awareness around it, right? Whatever we do, it's not going to see the kind of mass-scale adoption that we'd all ideally like it for it to be, right? In terms of cleaner alternatives. I think renewables has done a good job in that sense, but it took almost like 15 years before it really became mainstream, right? Or obviously what aided it was the cost curves kept coming down over that period, and truly now the economics is working in their favor, right? But at least what we believe is, at no point consumption is ever going to reduce from consumers, right? Consumers will continue to consume, right? The second best option is to have greener alternatives, right? And ideally, the greener alternatives need to be as cost competitive as it can be with their fossil fuel counterparts, right? And one of the steps towards getting there is obviously one, showing the environmental impact of each and every product, right? And what folks or businesses need to understand is like how calories were sort of reported on products probably 2-3 decades ago, right? The environmental impact or the cost that on the planet itself needs to be reported, right? And there are very innovative solutions that can really track what the environmental impact of the product could be, right? And some of the work that we're doing at Climbs is to bring about that transparency across different points of consumption, right? And consumers first need to be aware of what the carbon footprint is. And obviously there are lots of standards globally that are backed and certified by the United Nations and the World Economic Forum that constantly keep putting out these reports on what the environmental cost of consumption is today, right? But simplifying it and making it easily consumable, easily accessible to consumers at points of their consumption is a good start towards enabling that behavioral change, right? I mean, if you look at most flight platforms today, they do have what the carbon footprint of that particular sector of flight is, right? And I think across all different points of consumption, this should perhaps become the norm, right? You only manage what you measure, and I think awareness and measurement is the first step, right? Which is why we do believe that transparently showcasing the environmental impact of a product is the first step in aiding that behavioral change, right? And going forward, like, how do we avoid greenwashing? I think if it's out in the public, right, and companies and corporations can declare the environmental impact of their product across their supply chains in a way that it really doesn't impact their secret sauce, so to speak, right? And there are innovative models that can showcase that, right? I think that's a good step. Companies can't be, hiding behind the veil of, saying, hey, we're going to go net zero by 2030 or going to go net zero by 2050, right? We really don't know what is it that's going on inside their organizations, right? If they could transparently communicate it to their end users, to their consumers on what is going on in the supply chain, right? I think it's a good step, right? And the more the people see it, the more aware they become, and the more honest the ecosystem becomes, right? We've seen this in the last decade where, there are certain organizations that declare that they want to go net zero, or their product is carbon neutral, but they really showcase how they're going carbon neutral, right? But I think this decade, as consumers are becoming more and more aware, when I look at the Gen Z consumer, when I look at the millennial consumer, right, across the board, they really want to call out brands that are greenwashing, right? And the best way to sort of avoid all of those claims is by being very transparent to their end users, right? That's one aspect, right? And on the supply side, where a lot of solutions are coming through, and we think that, just technologies like, for example, on the forestry side or on the regenerative agriculture side, geospatial data can really help track the progress of carbon sequestration potential, right? And these were tools that weren't aiding the last decade of climate action, but going forward, given the advancements in technology, we think that there is a significant amount of transparency that could come through to sort of nullify those greenwashing claims that existed in the past, right? And in general, broad-based, right? I think there's more scrutiny from governments, from various other governing bodies, right? We talk about G20, we talk about the COP. I think there is far more scrutiny than ever before, right? So yes, I think those challenges around the consumer side could be negated by one, increasing awareness, and two, like for companies to come out there publicly, right, and declare that, hey, we know we can't go to net zero immediately, but we are showcasing the environmental impact so that, across the supply chain, we are trying our best to reduce emissions year on year, right? So a large part of the accounting that happens, rather than it being, at the sustainability officer's desk, can you put it out to your end user and then work backwards is I think a challenge that we could solve through one, showcasing the right environmental impact, and two, by making it more public, right?
No, got it. No, that's very clear. Thanks a lot, Sid, for sharing. And it's quite encouraging to see so many of these Indian corporations also making statements towards net zero. Obviously, one has to look deeper and understand how they're actually planning to get there. What are the different sort of accountability measures? What does it actually mean to reduce carbon in your supply chain, etc. But at least, the sort of, they're taking the step in the right direction, and hopefully consumers will follow suit. So Arjun, just turning to you then, to kind of help us understand a little bit more about industrial adoption. So, historically in India, we've had problems with infrastructure issues, whether it's on the grid or whether it's in buildings. There's been, it's taken a very, very long time to modernize infrastructure and get sort of large companies actually changing their mindsets. And let's adopt a new technology. Let's retrofit our HVAC systems. Let's install an IoT technology platform. Are these challenges still there, do you think? And when coming to your customer acquisition, how do you feel that is going to change in the next decade or so? How can we address those? And because ultimately the biggest sort of transition to clean energy or sort of decarbonization rather will come from the industry sector. So just curious to hear your thoughts on that.
Yep. Firstly, I'd like to share a not very often repeated fact, or even known fact. 51% of the reduction in greenhouse gas emission intensity of our economy is supposed to come from energy efficiency, as per Government of India's official plans. So the one thing, before I answer your question directly about customer acquisition, for us to even get close to that 51% number, one thing that needs to change is the Bureau of Energy Efficiency. So it's a small little office, okay, with a few people who've been there for 20 years, and they're not going to get us there. It's just as simple as that. So what we need is a huge overhaul, complete overhaul of the main political engine or the bureaucratic engine that is responsible to get us there, right? So if we think that they're going to get us there, we're just making empty plans and claims, right? Which is not good for us. So I think it's very clear, and I'll give you a couple of data points here. You know, in my field of energy efficiency, there are few things which are proven over and over and over again all across the world to actually work and make a huge impact. One of the same things is standards and labeling, right? Everybody knows Energy Star labels, okay? Now, just consider this fact. There are BLDC fans, brushless DC motor fans, that consume between 28 and 32 watts per ceiling fan. India probably has more ceiling fans than any other country. Even probably the top 3 countries put together would have less than India. Imagine BLDC fans until last year were not even considered 5-star labeled fans. In fact, 40-watt fans were considered 5-star labeled, but not a 32-watt fan. And it took us 5 years to change that. So obviously there's something wrong, right? We're giving wrong signals to the market. So how is the market going to adopt something if you're giving it the wrong signal? Next, you know, one of the actual policies that I'm really proud of as an Indian, where the government did really well to introduce a good policy, is the Perform, Achieve, Trade policy. Probably not even heard of it. Probably nobody's heard of it, but it's a really powerful, you know, piece of legislation. The top 500 energy consuming factories in India across 13 sectors and now more are given individual mandates to improve their energy efficiency over a 3-year cycle. Excellent policy. The goal of this policy is to move everybody closer to the best in class, right? So the farther you are from the best in class, the more difficult target you have, right? The policy has been there for 10 years. All we do is make up some data and make noise about it rather than actually do anything about it. This policy was supposed to have an element of tradable energy saving certificates. So if you've done really well compared to your target, you should be incentivized. And if you fail to meet your target, you should have a penalty. Well, guess what? The trading has been close to zero for 10 years. So again, you know, we do something really well by design, and then the people who are responsible for implementing don't follow up. So I think we got to start holding our bureaucrats and leaders accountable to deliver, right? Not just to promise and to talk and to show that things are happening, but to deliver on ground reality, right? So, you know, I'll take one more example, which is funding, right? There is a venture capital fund for energy efficiency in India. Guess what? Nobody knew about it. It's somewhere the money has been granted or, you know, allowed for the government to spend 10 years ago or even more, right? That money has never been used. It's just sitting there. Okay. And even worse, we take energy efficiency as a national priority. Now, a company like ours, when I was starting up 8 years ago, there was no money available in India, no grant money, nothing. The best kind of money you can get in the beginning is grants, right? I had to go to the US to get a grant. The moment I got a grant from the US, the government banned it and didn't let me use it out here in India because I'm a private limited company. So I think what we need to do is the government needs to get out of the way, right? And that's the first thing. And then whatever policies are there, they need to overhaul. We've already seen this with the telecom, right? And with Aadhaar. You bring good people in who know how to execute, get the old guard out of the way, and then, you know, you'll see a big transformation. So I think that's what's required. The single biggest thing I think that would make a difference is that. And in terms of industrial efficiency, I think, again, one thing that we're really good at in India is everybody wants to be first to be second. So I think the key is to capture some company which is very well known, right? Spend all your business development efforts to get that company to do a good job with that company and to showcase that that company is happy with your work. And then everybody else in that sector is going to want to do the same thing. So I think instead of adopting a spray and pray approach, right, you just focus your business development on the few people who actually move the market. And, you know, that's going to help you kind of at least scale in a few sectors. So I think focus on a few people. Yeah. So that's the customer acquisition secret that has worked for us, and I hope continues to work.
Great. Thanks, Arjun, for being so candid, and also, you know, explaining to us the rationale behind the thinking, how industries can actually move towards better adoption and what the strategies can be for that to that regard. So In terms of time, I think we're running a little short on time. So I'll hand over to Vinesh from Kalari on how we'd like to take either audience Q&A or any sort of last comments from the panelists. Vinesh, over to you.
Yeah, no, thanks, everyone. I think that was helpful. Just in the interest of time, we'll have any comments coming in from any of the panelists just to close this out. And then we can, kind of close the session. Yeah. So maybe Sid, you can go first, Arjun, and then Siddharth.
No, I think, look, it's heartwarming to see so many different entrepreneurs look at the climate space, right? And obviously, having been in the venture space for a couple of years before jumping into climate, I think amongst all the different sectors I analyzed, I was most bullish on the climate space, right? I think if I take a decadal view, every sector needs a transition to a climate-friendly alternative, right? And what digital was last decade, I truly believe climate and sustainability is going to be this decade. And the rush to net zero is real. I think this is the first generation that is really witnessing the impact of the ill effects of climate change, right? And that sense of urgency is broad-based today more so than ever, and it's really good to see so many different entrepreneurs tackling these problems across energy, transportation, agriculture, manufacturing, buildings, etc., right? And obviously the right kind of finance is coming through, so it's a great time to for us to be involved in this ecosystem and hopefully through the years develop this to one that's meaningfully contributing, just like what digital did over the last decade. And I look forward to sort of working with all of you to enable the right kind of financing and making sure that while we're also transitioning to sustainable alternatives, those business models themselves become sustainable at a unit level. So really excited for this decade, and thank you again, Kalari, for putting together this event, and thanks Priya, Sid, and Arjun for sharing your candid thoughts.
Thanks a lot, Sid. Arjun, would you like to go next? Any last few comments from your side?
Yeah, I'd just like to end with one thing, with that we have the opportunity to build the least energy and carbon intensive infrastructure anywhere in the world, and that would matter a lot to the world. I think we should take some lessons and examples of what has worked and raise the level of aggression. I mean, mandates like the European Union just mandated all new buildings should be zero emissions by 2030. And all existing buildings need to be zero emissions by 2050. These are aggressive mandates, and they're going to do it, right? We don't have anything like that. So we should take inspiration from something like that. And another couple of examples, I think what the US government has done over the last 10 years, barring the Trump 4 years, what they have done to transition the policy making and the bureaucratic engine itself. They brought in experts. They brought in people with real experience who have changed markets into policy making and regulatory roles. And they're still doing it. Professor Arun Majumdar was the head of RPI. And because of his efforts over there are hundreds of technologies that would have not been there. Now they're there in the market, right? And Jigar Shah is now in the DOE. He's built Sun Edison, and now he's within the DOE running the loan program office over there and putting billions of dollars to work. We've seen examples like that here in India, and I think we need to do a lot more of that. Bring people with real business market experience into government and policy making roles at the highest levels. I think that's going to make a huge difference. So that would be my message. Thank you for having me, and wonderful to be here.
Great. Thank you so much, Arjun. And Siddharth, any last few comments from your side?
Sure. I think Sid and Arjun have covered quite a few, but I think the last comment I would like to say is that this is an idea whose time has come. Despite all the handicaps that we have as a country, there are challenges, of course, but the opportunity is huge, and the startup ecosystem in this country supported with the mature industrial ecosystem. And what I see and what I also experience on the ground is that both these ecosystems are working together. And there seems to be that sense of urgency amongst even large corporates, as much as it is with us, startups, that people want to do something. Hydrogen has suddenly become flavor of the season. And I keep joking with people that I don't know how many of these will survive, but it is good that it has become flavor of the season. It has to, the climate responsibility as a subject should become a prime time topic. Yeah. And to end, this wonderful panel today, I want to leave a thought that we saw the COVID pandemic, and all of us were very, very careful. We wore a mask. We took vaccines. Some of them even took 3 doses. I know of a few who took 4 doses of the vaccine. But at least we were able to bring back life. So with 5 million deaths, the world shut down for 2 months. 5.2 million people die of climate change. How many minutes have we shut down the world for? So it is, I think the time has come for all of us on this panel, the people in the government, at the policy level, investors, consumers, all of us are ingredients to something that I called as a vaccine for climate change. So we have to come together, we have to work on this, and it is our duty to vaccinate the earth, because you only have one earth, just like you have one life, one body. So there cannot be plan B, plan C, plan A. It is our earth, and it is our duty to come together, not only for the future generations, but also for our generation, because all of us are young here. I'm sure we aspire to live for another 30, 40, 50 years, as much as God may permit. But we have to do this for us and the coming generations. And the message from our side or my side is, let's come together and build a climate change vaccine. And let's give something back to Mother Earth. And of course, thank you, all of you. Thank you, Sid and Arjun, for your insights and comments. Priya, thank you for being such a good moderator. And thank you, Kalari, for putting this together.
Thank you. Thank you so much, Siddhartha. From my end, just very honored to have participated alongside you. I think completely echo your points on collective action, energy independence, domino effect of industry, corporates, consumers coming together. And I think we're definitely at that inflection point in India for us to really kind of push things along in a very positive way in regards to climate action. So feel very privileged to have had this discussion today, and very inspired, and looking forward to more such engagement and participation, and also collaboration from all of us. So thank you once again to Kalari for having us today.
No, thanks, Priya. Thanks a lot, and thank you all for the insightful session. We'll just wait for Ravi to kind of come on screen, but I think once again, when Vani, I remember when she started in the opening note, right? She laid the importance of how the power of one is very important. So I think building up from that, want to see something turn around. And I'm very early understanding this space. I only started understanding this space in the last few months. So, love to kind of, hear and, know what new entrepreneurs are building and kind of take it forward. But I think that's pretty much, I'm not sure where Ravi is, but I'll just try to get him. But otherwise, thanks all the people here. And of course, special thanks to Climbs and my very good friend and, very solid entrepreneur, Sid, for helping us getting this carbon neutral. And I think as I've not, done the Climbs pledge every time I book tickets on Make My Trip, but I think I'm going to do it going forward now. But I think, yeah, that's pretty much from my side. And, if any one of you all in the audience is a climate tech founder, you all want to speak, very happy to always chat and, connect with some of the people over here in the audience. So thanks a lot for taking out the time and, have a good rest of the evening. Yeah.
Thank you, Videsh.
Thanks, Ganesh. Yeah.
Thank you. Bye.